This is Justin from Parity Chronicles with a tutorial about the wash sale rule. Now, as I get into this topic, keep in mind that I am not a tax professional and you should not rely on this video for tax advice. You are encouraged to seek a tax professional for an authoritative opinion and also research materials written about the wash sale rule, especially the one by the IRS in publication 550. I will go over how it's usually interpreted in the personal finance space, keeping in mind that the term interpreted is intentional. The wording can be a bit vague in parts, and there is some disagreement on how to interpret the rule. So I'll go over that in a moment. This video is a follow-up to the how to do an asset swap, which if you watch involves a kind of three-step process for changing allocations within different accounts in order to withdraw from the account that you'd like in the most tax efficient way. So if you have any type of tax loss harvesting, you should be aware of this rule because it involves cases where you want to do kind of a quick transition between sell and buy or buy and sell of similar assets. And you need to be aware of what the rule says you can and cannot do. Now, if your transactions are only within a tax-protected account, then no problem. If you're only doing this within your Roth IRA or your 401k, then that's separate. But if any type of your swapping around or moving or purchases and sales involve a taxable account, a brokerage account, then this applies. Now, what gets tricky is if you do a little bit in a taxable account and a little bit in a retirement account, you do have to pay attention to the whole transaction. The IRS will look at your total holdings. You can't game the system by switching accounts, and that's what the wash sale rule is all about. The rule is in place to prevent people from getting the tax write-off for a loss when all they really did was an exchange. So they took a loss in one account, but balanced that out with a purchase in another account. And what the IRS does not want you to do is say that's a loss. The rule is designed to prevent that kind of trickery. Okay, so here's the wording from publication 550, chapter 4. A wash sale occurs when you sell or trade a stock or securities at a loss and within 30 days before or after the sale you 1. Buy substantially identical stock or securities, 2. Acquire substantially identical stock or securities in a fully taxable trade, 3. Acquire a contract or option to buy substantially identical stock or securities, or 4. Acquire substantially identical stock for your individual retirement arrangement, IRA or Roth IRA. So, in a nutshell, when dealing with a capital loss, you cannot replace it with a substantially identical asset within 30 days of the sale, either before or after. Very important. Think of it as a 61-day window. Anytime you're going to declare a loss in a taxable account, it's a 61-day window, 30 days before the day of the sale and 30 days after, where you cannot purchase a substantially identical asset to essentially make an exchange. Now, with individual stocks, it's straightforward. You sell Coke, you buy Pepsi, that's okay. Those are different companies. You can claim, of course, that you think Pepsi's management's better than Coke, and even though they're both soft drink companies, it's no problem. Those are different. It does get tricky, however, when you talk about mutual funds and index funds. And the general advice is that in order to avoid something substantially identical, is you want to buy an ETF that tracks a different index. Meaning, if you take a loss on an S&P 500 index fund, you cannot go buy another S&P 500 index fund. Instead, you should buy an ETF that tracks a totally different index, where the total stock market, which is then 7,000 companies, not just 500, or maybe a Russell 200 index fund, then it's going to track 200 companies, not 500. And generally, in the personal finance community, that's considered to be not substantially identical and therefore allowed. Now, I just want to point out, this is a common belief that goes around in the personal finance community, but that element there is neither specifically endorsed nor banned by the IRS. Simply, the only thing there is substantially identical, and that's the way most people have interpreted it. But just to be clear, that's not what the IRS says. It doesn't not say that, but it doesn't say that either, so keep that in mind. Now, if you go back to the asset swap videos, to give an example, what I did there was I wanted to sort of get to sell some of my long-term bonds in my brokerage account in order to get to do an asset swap, and then I had to rebuy bonds in my tax protected IRA. Now what I did there is I switched from long-term bonds to intermediate-term bonds. Those are not substantially identical. I could say that I went from a duration of 20 plus years to a duration of 7 years. So those are not the same. I could have, on the other hand, gone to extended duration bonds, which have a duration of 30 years as opposed to 20. So as long as it's significantly different, I can have a swap like that. Now, very important, do not just switch providers. For instance, if you are selling a Vanguard S&P 500, you may not buy a iShares S&P 500 fund. That would be considered substantially identical. They're different providers, but they're tracking the same thing, so that would not be allowed by the IRS, okay? You can avoid the issue entirely by just waiting 31 days. So you make your sale, or you just wait for the window to close, keep the money in a transition account or in cash or something, and then just do whatever you want. After 31 days, you're fine. The substantially identical rule is open for interpretation. I personally don't cut it close. There's so many possibilities out there. I don't need to worry about 31 days of something being exactly what I sold. So I stay wide and clear of the whole issue. You are encouraged to talk to a tax professional if you feel like your situation is complicated or you want assurance about what's going on. They can help you. So that is it for the rules and restrictions of a wash sale. Happy to answer your questions if you have any. Please feel free to email me at riskparitychronicles@gmail.com. Please continue to follow me on the blog, riskparitychronicles.com, and you can find me on Twitter at @rp_chronicles. Thanks. Bye-bye.